Welcome to today's edition of Wall Street Connected with Davis Martin. Here in this crazy market, I want to talk to you about the next stops which I'm watching on SPY, the exchange traded fund which tracks the S&P 500, and QQQ, the exchange traded fund which can keep up with those big tech stocks for you. Why these two? There are so many exchange traded funds out there. Why am I watching these two? It's as simple as where the supply and demand for the biggest companies in the world are. These are two very powerful funds. If I'm taking a look at the broader stock market and I want to know, all right, the market's had a rough week. It did indeed crash about, 2-3% just yesterday, in fact. Where might the next stops be? I take a look at the Dow Jones Industrial. I'm only looking at 30 stocks and not even the 30 biggest ones either. I take a look at the Russell 2000, for example, and I'm looking at small cap stocks. Half of them are bankrupt companies, right? I don't really care about that. I want to know what's the S&P 500 up to. So Apple, Tesla, Amazon, and then the NASDAQ, of course, Amazon, Tesla, Google, Netflix, the FANG stocks, Roku, Peloton, all these stocks which became wildly hot in the pandemic phase through 2020. And have just been big companies, thinking about companies like Chevron, ExxonMobil, companies which have been around forever, right? I want to know where those stocks are going, what they're looking at, what they're looking like, and the easiest way to do that is to track their funds, S&P 500, SPY, and the NASDAQ, QQQ. Now, the S&P 500, yesterday, when the market sold off about 2-3%, this one held its 50-day simple moving average line on a daily chart. Today, next week, etc. It better hold that. It better keep holding that, if you will, and create kind of a base off of it, which it can possibly work off of for a short-term recovery. I don't know if that'll happen. Time will tell. If it loses that just off the chart, it does have room to lose another possible $10 a share. I'll be waiting to see if that happens. I certainly won't be throwing any darts in the meantime for that NASDAQ, the tech wreck. Yes, this little crash in the markets here that we've been seeing is a result of some weakness in tech, and that would explain to you why the NASDAQ's been down 3% when the S&P's been down 2%, for example. That NASDAQ is just super tech heavy. So if you see that NASDAQ doing worse or doing better than other indices, for example, it's oftentimes a reflection of what tech stocks are doing. So the QQQ, that has about $10 worth of downside opportunity today as I'm speaking right now, and that would just take it down to its 100-day simple moving average line on a daily chart. Now, well, this dip has been a little bit scary for a lot of people. There's a lot of traders in the market. People might have been piled in and stuff like that. I've very intentionally been staying very light overnight. So I'm letting the market come to me. This is why I'm looking at the potential next stops for the large indices. I don't want to throw darts and try to call a bottom. I'm not that smart. I don't think many people are out there. However, if I can at least be prepared for possible entries into some positions of stocks which may be trading for a little less money than they were just a couple weeks ago for when the time could be right, then I want to go ahead and be able to do that. I'll be as patient as the market needs me to be because I don't like losing money in my trades. But this video hopefully has given you an idea of where I'm watching markets for a possible bottom for now. I hope it's helped you, ladies and gentlemen. Thank you for your time.